Hey everyone, welcome back to BullionIQ. I'm thrilled to have you here today because what we're about to talk about could change the way you look at XRP forever. If you're an investor, a crypto enthusiast, or just curious about what's really going on behind the scenes, stick around. Today we're diving into something that most people completely overlook, the XRP supply shock quietly building right under our noses. You might think XRP's price has been boring lately. Honestly, it has been calm. Almost unexciting, but don't let that fool you. Beneath that calm surface, a lot is happening, and if you miss it, you could get blindsided. At first, I was skeptical too. The term supply shock has been floating around everywhere. Twitter, forums, crypto groups. It sounded like another buzzword, another person shouting that XRP is about to explode. I've seen hype come and go, and normally my first reaction is to roll my eyes. If a supply shock was real, wouldn't the price already be moving? But as I dug deeper, I realized most of us, myself included, have misunderstood what a true supply shock really is. A real supply shock isn't just headlines or sudden excitement. It's a slow, quiet, structural change that accumulates over time, building pressure silently. Imagine it like pressure under a lid. You don't notice it until the lid pops. That's exactly what's happening with XRP, and it's happening in ways that many investors don't even consider. One of the first signs came from the world of decentralized finance, or DeFi. And no, I'm not talking about random meme coins here. I'm talking about actual use of XRP in serious DeFi projects on the XRP ledger. Think about liquidity pools, lending protocols, or staking systems that use XRP. When XRP is locked into these platforms, it's not available for normal trading. It's effectively removed from circulation. For example, if you deposit XRP into a liquidity pool to earn some fees, that XRP is busy working there and isn't sitting on an exchange waiting for someone to buy or sell it. Same with staking XRP for a loan or delegating it to earn yield. Each token locked like this reduces the available supply for the market. Bit by bit, this is adding up. Analyst Phil Kwok, a co-founder of a crypto app, pointed out that DeFi on the XRP ledger is quietly absorbing XRP. Liquidity pools, lending markets, new decentralized apps. They might lock a few million XRP here, a few thousand there. It doesn't seem like much at first, but over time it adds up. Like a leaky faucet filling a bucket overnight. Eventually, that bucket is full. Next, there's something even bigger, XRP spot ETFs. If you haven't heard, XRP now has spot ETFs in some parts of the world, just like Bitcoin. This is huge because ETFs must hold real XRP. When you buy shares in an XRP ETF, the fund managers go out and buy actual XRP tokens to back those shares. And they've been buying aggressively. Over $850 million flowed into XRP ETFs in a single week recently. That's nearly 500 million XRP removed from the open market and locked in cold storage. 500 million XRP gone from daily trading. Think about the impact when that much liquidity disappears quietly. And it doesn't stop there. This part is just the beginning of a multi-layered story. We've only touched on DeFi and ETFs, but there are banks, fintech companies, and Ripple itself adding more pressure on supply. Each piece builds toward what could be a massive supply shock, quietly brewing while the price looks calm. Let's talk about the role of big institutions. Banks, payment providers, and fintech companies aren't here to trade XRP for quick profits. They're holding it for practical long-term use. Think about a bank using XRP for cross-border payments. If a bank needs to move money instantly between countries, it must keep a stockpile of XRP ready. That XRP isn't floating on an exchange. It's effectively out of circulation, sitting in a vault or with a custodian, just ready to be used when needed. These institutions don't behave like traders. They aren't going to sell their XRP because the price jumps. They're holding it for operations, which means more XRP is being removed from the daily trading pool. The more institutions join the network, the more XRP gets locked up. This is critical because it adds to the supply squeeze quietly building underneath the calm market. Next, let's look at Ripple itself. The company holds a huge amount of XRP in escrow accounts. Every month, 1 billion XRP is released on a programmed schedule. But here's the interesting part. They don't just dump it onto the market. Ripple is careful and disciplined. They sell only a portion to support the ecosystem or partners, and anything unused goes right back into escrow. This controlled release means that new supply isn't flooding the market. The faucet is dripping, not gushing, keeping the supply tight. Meanwhile, other forces continue to absorb XRP. On-chain utility is a major factor. Real projects are using XRP in ways that lock it up. Tokenization is one example. Projects are tokenizing assets like stocks, funds, or even real estate on the XRP ledger. When XRP is needed to provide liquidity or facilitate these tokenized assets, it's effectively removed from circulation. Stablecoins on XRPL, like RLUSD, also use XRP in liquidity pools to maintain stability. Again, those tokens are locked up while doing their job. Payment corridors, particularly Ripple's on-demand liquidity, are another way XRP is absorbed. Every time a new corridor opens between two currencies, some XRP has to be held in transit to bridge the transfer. It's not being traded for speculation. It's just doing its work moving money. If the volume of these transactions grows, even more XRP will be held off market. Automated market makers, AMMs, on XRPL are also contributing. I've personally tried this myself. When you deposit XRP into a pool to earn yield, it stays in the smart contract until withdrawn. That XRP is temporarily removed from the market. Even identity and security applications are starting to emerge. Zero-knowledge identity verification systems on XRP Ledger may require XRP to be locked as deposits or credentials. These futuristic applications might seem small, but they collectively remove XRP from circulation over time. Each project might lock a small amount, but when dozens or hundreds of projects are running simultaneously, the total absorption is significant. Let's take a step back and look at the full picture. DeFi is quietly siphoning XRP from exchanges. Spot ETFs are gobbling up enormous chunks. Banks and fintech companies hold reserves. Ripple is releasing XRP slowly and predictably. On-chain utilities are steadily absorbing tokens. Combined, these forces are shrinking the liquid supply of XRP more than most investors realize. Yet, if you only glance at the price chart, you might think nothing is happening. XRP has been stable, maybe even boring. No massive rallies, no crashes, just small fluctuations. That stability can be deceiving. Calm waters often hide strong currents underneath. The supply is tightening quietly, but demand hasn't surged yet, so the price remains in equilibrium. It's like a store slowly running out of stock. You might not notice until everyone rushes in, and that's the critical point. A supply shock doesn't always show itself immediately in price. The groundwork is being laid quietly. When the right spark happens, a big investor entering the market, sudden retail interest, or a major news event, the supply shortage could hit hard and fast. Buyers will find far fewer XRP tokens available than expected, pushing the price upward rapidly. Veteran investors like Pompeius and Phil Kwok emphasize that supply shocks are silent. They don't announce themselves, they just happen. And when the market finally reacts, the price adjusts sharply. That's exactly what's brewing with XRP right now. The boring phase is deceptive. It's the calm before a potential explosive move. And understanding this early gives investors a significant advantage. So, now that we understand the forces quietly reducing XRP's circulating supply, let's talk about why the price hasn't exploded yet and what that means for investors. You might be asking yourself, if 500 million XRP is already off the market, plus what's locked in DeFi, ETFs, and banks, why hasn't the price surged? The answer is simple. Demand hasn't spiked enough yet to trigger the full effect. Supply is tightening, yes, but the market is still in a balance. It's like a balloon being slowly inflated. You don't notice tension until the balloon is ready to pop. Right now, sellers are still matching buyers enough to keep the price steady. But as soon as a significant wave of new demand hits, whether from retail investors, institutional buyers, or news that drives FOMO, the imbalance will be revealed. Suddenly, there will be fewer XRP tokens available than people expect. That's when the real supply shock takes effect. Prices could climb quickly, and anyone holding XRP could see rapid gains. But here's the key. Being unprepared could leave you scrambling. Preparation is crucial. One of the first things I do is ensure I'm not relying on just one exchange. During a sudden surge, exchanges can become choke points. Websites crash, apps glitch, withdrawals get limited, or trading may even be temporarily halted. These problems have happened before in other crypto surges. If you're only on one platform, you could miss the opportunity or get stuck with funds you can't access. That's why I maintain accounts on multiple exchanges like Binance, Coinbase, Kraken, and KuCoin. Each serves as a backup if another faces issues. Another vital aspect of preparation is security. When prices go wild, exchanges become risky places to store large amounts of crypto. Hacks, freezes, or operational issues can put your holdings in danger. That's why I store the bulk of my XRP in a hardware wallet. Personally, I use Ledger devices to hold crypto offline where I control the private keys. Not your keys, not your crypto is a mantra every investor should follow. A hardware wallet might feel inconvenient, but during a sudden price surge, it's peace of mind. You know your holdings are safe regardless of exchange issues. Affiliate links aside, I want to emphasize that these strategies aren't just about earning a little bonus. They're about being prepared for volatility and protecting your investment. If XRP suddenly spikes, having access to multiple exchanges and secure storage ensures you can act quickly without unnecessary risk. Another aspect I focus on is staying informed. Crypto markets move fast, and being early on news can make a huge difference. That's why I encourage viewers to join our free Discord community. We share insights, breaking news, and strategies in real time. If you're monitoring XRP developments alongside like-minded investors, you can react quicker than the average retail trader. Knowledge is power, and in a market tightening like this, timing is everything. Let's not forget the human psychology side of things. When people finally realize how much XRP has been taken off the market, the rush can be intense. FOMO can drive massive buying pressure in a very short period. That's when the supply shock becomes fully visible. Early holders benefit the most because they are prepared and understand why it's happening. I also plan for scenarios where sudden spikes create liquidity challenges. If exchanges run dry or impose withdrawal limits, having XRP spread across multiple accounts and wallets ensures I can maneuver without delay. This is part of a disciplined approach that serious investors use to reduce risk while being ready to act when the market moves. Finally, let's remember that patience plays a huge role. The supply shock is building quietly, and it may take weeks, months, or even longer for the market to fully recognize it. Holding XRP with conviction, monitoring developments, and being prepared operationally puts you in a strong position to capitalize when the timing is right. This is not about chasing quick gains. It's about understanding the market mechanics and positioning yourself strategically for what's coming. In short, XRP holders right now are in a critical period. It's calm, but that calm is misleading. Supply is decreasing, demand could spike at any moment, and the market might react faster than most expect. Preparation, security, multiple exchange strategies, and staying informed are key. Those who understand this quiet buildup are far better positioned than those who dismiss the calm as boring. Projects are tokenizing assets on the XRP ledger, from stocks and funds to real estate. When they do this, XRP often acts as the intermediary or liquidity provider. This means XRP is locked into these projects and isn't available for normal trading. Every token held for these purposes is effectively out of circulation. Stablecoins on XRPL are another major factor. Coins like RLUSD rely on XRP to maintain liquidity pools that keep their peg stable. Anyone providing XRP to these pools is temporarily locking it away, contributing to a slow but continuous reduction in available supply. As the number of stablecoins grows, so does the demand for XRP to back these pools. These projects aren't flashy, but collectively, they create a strong underlying mechanism that reduces circulating supply. Payment corridors, particularly Ripple's on-demand liquidity, ODL, are also absorbing XRP. Every time a new corridor is opened between two currencies, some XRP is needed in transit to facilitate instant transfers. This XRP isn't being traded for profit. It's locked in motion, enabling seamless cross-border payments. As more corridors are added and transaction volume increases, the XRP held for these operations grows steadily. Each corridor might require a relatively small float of XRP, but dozens or hundreds of them combined have a significant cumulative effect. Automated market makers, AMMs, introduced in the recent XRPL protocol update, are another absorbing factor. When investors deposit XRP into AMMs to earn yield, it's tied up in smart contracts until withdrawn. While individual deposits may seem minor, the ecosystem is growing. With more participants, more XRP is effectively taken out of the open market. Even more futuristic projects are appearing, like identity and security applications. Zero-knowledge identity verification systems on XRPL may require XRP to be locked as deposits or credentials. These applications might start small, but if widely adopted, they could consistently lock up XRP for identity verification purposes, which is a fascinating and underappreciated demand driver. All these real-world use cases, DeFi, ETFs, tokenization, stablecoins, payment corridors, AMMs, and identity systems, share one thing in common. They remove XRP from daily trading. Each project alone might not make a massive difference, but the cumulative effect is enormous. The liquid supply available to traders is shrinking quietly, and most retail investors don't even realize it. This slow and steady removal is a textbook example of a supply shock forming behind the scenes. Let's also not forget Ripple's own role. Their disciplined approach to escrow releases ensures that new supply is predictable and doesn't flood the market. By releasing only what's necessary, Ripple avoids oversupply and keeps the market healthy. Combined with all the other factors, this creates a situation where demand could easily outpace supply if interest surges. Now imagine all these forces coming together at once. DeFi and AMMs absorbing tokens, ETFs locking up hundreds of millions, banks holding reserves for operations, XRP used in real-world applications, and Ripple controlling its supply carefully. The result is a market quietly tightening, with less XRP available than most investors realize. This is the pressure building under the calm surface we talked about in part 1. You might be asking, Why isn't the price shooting up yet? The answer is simple. While supply is tightening, demand hasn't spiked dramatically. A supply shock often needs a catalyst, a surge in demand to push prices up. Right now, the market is in a delicate balance. Buyers and sellers are roughly matched, which keeps the price stable. But the moment a large wave of new demand hits, the imbalance will be revealed. Those holding XRP will find fewer tokens available than expected, creating intense buying pressure. In my view, this is exactly the setup for a potential explosive move. The calm market right now is misleading. It's the quiet before the storm. Investors who understand this dynamic are watching closely, preparing strategies, and positioning themselves for the moment when the supply shortage meets heightened demand. Finally, let's bring everything together and talk about what all this means for XRP holders and how to prepare for the potential supply shock. As we've seen, the circulating supply of XRP is quietly shrinking due to DeFi, ETFs, banks, on-chain projects, and Ripple's controlled escrow releases. Yet the price looks calm, almost boring. This is exactly what makes the situation so interesting. Calm markets can hide powerful forces at work, and for anyone paying attention, this is the perfect time to plan and position yourself strategically. One of the first things I do is ensure my XRP holdings are spread across multiple exchanges. During a sudden surge, exchanges can experience delays, glitches, or even temporary trading halts. If all your XRP is on a single platform, you could face problems withdrawing or trading quickly. By maintaining accounts on several reliable exchanges like Binance, Coinbase, Kraken, and KuCoin, I can move fast, access liquidity, and react to market movements without being caught off guard. This strategy reduces operational risk and allows flexibility when demand spikes. Security is another critical aspect. Exchanges, no matter how reputable, are not ideal for long-term storage. Hacks, withdrawal freezes, or system outages can put your holdings at risk during volatile periods. That's why I keep the majority of my XRP in a hardware wallet like Ledger, where I control the private keys. Not your keys, not your crypto isn't just a saying, it's essential for protecting your investment. A hardware wallet may seem inconvenient, but in moments of extreme market volatility, it can make all the difference. Being prepared also means staying informed. Crypto markets move fast, and news can trigger massive demand surges. That's why I encourage viewers to join our free Discord community. There, we share real-time insights, breaking news, and strategies, helping each other stay ahead of market shifts. Knowledge and timing are powerful tools, and being part of a community can give you an edge when the supply shock starts to reveal itself. Patience is just as important as preparation. A supply shock can take weeks or months to fully materialize. The current calm phase is the perfect opportunity to observe, learn, and position yourself without rushing decisions. Investors who understand the underlying mechanics, how supply is quietly tightening, and how demand could surge, are in a strong position to benefit when the market finally reacts. This is not about chasing hype. It's about strategic planning and understanding the market dynamics. Finally, think about what happens when the spark hits. A sudden wave of demand will meet a shrinking supply. Buyers will find fewer XRP tokens available than expected, and the price could rise quickly. Early holders, prepared with secure storage, multiple exchange accounts, and an understanding of the market forces, are best positioned to benefit. Those who ignore the calm may find themselves reacting too late. The main lesson here is simple. Don't be fooled by calm prices. XRP's supply is tightening through multiple channels: DeFi, ETFs, banks, Ripple's controlled releases, and on-chain utilities. This creates a hidden pressure that could fuel a sharp upward move once demand spikes. Being prepared, patient, and informed allows you to navigate this quietly building supply shock effectively. In conclusion, this is one of those rare moments in crypto where understanding the mechanics behind the market gives you a significant advantage. Hold strategically, secure your assets, stay informed, and watch carefully. The calm before the storm might be the most critical phase for XRP holders. And remember, investing is always your responsibility. Do your research, protect your holdings, and plan for the opportunities and challenges ahead.